What's up, everybody? Welcome back to another video of my trading journey. I kind of want to wish everybody some happy holidays. Christmas is coming up, New Year's is coming up, and I think this is a time for, I guess you could say, responsible traders to get out of the market. This is a time where it's season for setups not playing out and zones not being respected is highly likely. Um, and simply because we're already at the end of the year. Holidays are around the corner. Not a lot of. I personally don't think that if you think about it, if you were, the big banks and, the whole talk about, market makers and everything like that, people that have billions upon millions and trillions of dollars in the market, um, aren't likely to be trading, towards the end of the year, right? So with that being said, enjoy some time with your family, be present, be there for your kids, be there for your girlfriend, your boyfriend, whatever. I don't know if I have female followers, but if I do, spend time with your loved ones, spend time with, your spouse. Time is something we don't get back, right? So it's your most valuable asset. So keep that in mind, moving into the holiday season here soon. But moving forward, I hope everybody had a great week last week. The week of December 11th through the 15th is what we're going to be going over today. I'm going to try and keep this video very short. I have a timer set. I'm working on trying to get a better platform to record so I can upload in 1080p for those of you that like the high resolution videos. I know I do, so I want to be able to bring that experience to you guys. So I'm working on that. Looking to get a different setup so I can go ahead and actually have a better way of showing you guys what my journey is looking like. So I'll have a bigger screen. So that's coming up here probably in the next couple of weeks or so. So bear with me. So let's get started. Monday we had this is Monday of last week, Monday of December 11th, right? We're going to be talking about that, and then we're going to be talking about the last trade that we took. I did also take a setup. Today's Monday. Well, it's actually 1 in the morning. Monday going into Tuesday, right? I did take I didn't take any trades this week. I'm not going to be taking any trades for the rest of the year. I'm probably not going to start trading until the end of January or beginnings of February. So the reason why I'm doing that, it's not because, I want to take off just because of the holidays, but I want to be able to kind of mentally be away from the charts. So when I do come back, I'm going to be refreshed, a little bit more focused, more relaxed. I'm not going to be, um, as impulsive as I normally am, and as well as being accommodated with my new broker. There's been a lot of talk about unregulated and regulated brokers with everything that's been going on. If you guys are seasoned traders, you know that there's been a lot of, I guess, anomalies going on with different things within the industry with like trading with prop firms, funded challenges, unregulated, like I said, regulated brokers and everything like that. So my personal advice is, me being, I don't want to say I'm a veteran, but I've been trading for about 3 years now. So seeing how things have been playing out, I think it's just best and safer, in my opinion, right? Again, this is not financial advice or anything like that. This is just my personal opinion, um, to go with a regulated broker, right? There's a couple of options. I'm not going to get into too much detail with that. If you guys really want to know, you can do your research. Google is free. If you want some reviews, honest reviews, go to Twitter. Um, but with that being said, I'm just gonna give myself some time. Like I said, until January, February. I am still gonna be making YouTube videos. But as far as actually putting in a live trade, that probably won't be happening until the end of January or beginning of February, right? So let's get into it. Monday's trade. This trade was last week. I think if I am not mistaken, on my last YouTube video, if you guys have been keeping up, we talked about NWOG, which is the new weekly opening gap, right? Um, and for Monday, moving in from Friday, December 8th into Sunday, December 10th, we had you can't see it here. Let me see if I can go down to a smaller time frame just to make sure that, we cover that so you guys can take a look at it. But we did talk about, I think I marked it up in my last YouTube video. So if you stayed up until the end, I usually upload the NWOG for that week, right? So this is it right here. So if you look at the date at the very bottom, again, down here by my cursor, that gives us the time and the date, right? So we're moving from Friday into Sunday, right? Remember, NWOG is the close on a Friday and open on a Sunday for the new week. And if you look here at the bottom, we have Friday, usually 5 p.m. right there. So close was up here at this price. And the easiest way you can find that is if you hover over with your mouse over the candlestick, you have open, high, low, and close, right? So if you hover over this candle, which is at 4:59 p.m., which was close, we're looking at this right here, the C. When I hover over this candle, we have 16,094 as our closing price. And then you want to look at Sunday's candle when it opens, and same thing, we're just hovering over that candle and we're going over to the O for the opening. And we have that set at 16,093, which is exactly where this line is at, right? So that was our NWOG. So let me go ahead and go back up to the higher time frame. And the reason why I'm going back into different time frames, think of it like a magnifying glass, right? So for those of you that are new to the channel or new to trading, the time frame up here, all this is just me zooming each candle. You can zoom in a little bit more. Think of it like a magnifying glass, right? When you are looking into something a little bit closer and closer, it expands. So I'll give you a really, really easy example. Like that, this big candle right here, it's 15 minutes to create this candle, but I can go into a 5-minute time frame. Go back to that same candle. If I'm not mistaken, it was right here. And then what they do is they break that 15-minute candle into a 5-minute candle. So now you can see that that single down past candle that was once a single candle, a 15-minute candle, right? Now breaks up into 5, 10, 15, which is your 15-minute candle. And that's all it is whenever I'm moving in from a 15-minute higher time frame, 1 hour daily, et cetera, all the way down to a 1 minute, right? So I normally look at the higher time frame all the way from, we talked about this before, weekly, daily, 1 hour. The 15-minute is usually my favorite. And then I move into the 5-minute, take my trades on the 5 and the 1 minute time frame. So new weekly opening gap on the 11th, 10th going into the 11th of December was created right here. That morning was a very interesting morning because I honestly thought that we were going to go, price was going to go lower after tapping into the number one, this fair value gap that was created, right? And once it tapped into that fair value gap, I was pretty certain that we were going to go lower just because we had already left so much liquidity down here. And by liquidity, I mean stops. So if you were a buyer in this market, right, your stop would probably be around these areas here, those lows. So that's what my primary thought was, right, going into when I uploaded this video, probably about 3 in the morning. I had marked this zone up, and then in the morning, 5 a.m., I had marked this right here, saying that we had tapped in there. But it didn't go down to the stops that I was originally aiming for, which was totally fine. You know, we have to adapt and we have to kind of learn how to read what price is doing at the moment. So what I saw here is we had this pass going up into buy side, and then we came down here. We kind of just barely wick that zone right here. And then it just started going climbing higher. Um, so let's jump into a lower time frame. So all I'm doing is this is a 15-minute time frame chart. We're gonna go to the same chart, but it's gonna be on a 1 minute. So you notice it looks very similar. It's just breaking it down so much more. So each candle right here is 15 minutes. And in this chart, each candle is 1 minute. So we're just zooming in to get a better detail. Some people may say, hey, it's too noisy. There's too much going on. Like you can't really read price action. And that's why I go based off of the higher time frame first to give me some sort of direction or some sort of narrative of what is happening in the market. And then I zoom into a 5 to 1 minute chart and take my trade there. So let's take a look at it here. Remember, originally we were looking for lower prices, tapping into this fair value gap and getting pretty close to our NWOG here. But it didn't quite give me, I mean, you could have definitely sold here. It was 452. I'm not up at that time. But it's something that you can definitely, you can take. It's a valid setup, but it's just not within my time frame of trading. So this was 8:26 right before the open. I was looking at this right here as far as an entry to possibly go short. I marked it. I didn't take it just because the only reason and what held me back from taking this setup, and actually it would have probably given me a 1-to-1. But the only thing that held me back was seeing these equal highs right here, right? So when something looks too perfect for me, I feel like there may be stops here because I see that as equal highs. And when you have equal highs, to me, that shows that there is liquidity sitting up here, right? Um, so that's what that shows me, that there's liquidity sitting up here. Um, and eventually the market is going to want to go up and take out these traders, right? So that's how I see the market. So when I see an equal high, that's what I see stops, which means that if I would have entered in this trade, yes, I would have probably made a 1-to-1. Or if I was aiming for a little bit higher, which was what I've been doing previously, if you guys have been keeping up with my YouTube videos and my Instagram, I've been taking a higher trade ratio than normal. So I've been targeting like 1-to-2s, 1-to-1.5s, 1-to-3, sometimes even 1-to-5s, right? Which is it's it's probable, right? It could happen, but it's more likely for you to hit, a 1-to-1 ratio. And what I mean by a 1-to-1 ratio, um, man, I really need you guys to let me know. Like if you in the comments, if you guys let me know if you want me to make some more basic videos, like what I mean by some terms that I'm talking about. If you guys are seasoned traders, you should already know what I'm talking about when I mean a 1-to-1. But for the sake of this video, I'm going to show you guys. So if I was taking a short right here, let's say I entered right there, a 1-to-1 would be exactly what that is right there. So if I wanted to bring my stop, for example, to this high, and I just wanted to target, if you look here, risk to the reward ratio, I'm risking one, for example, in this case, you could risk $1 to make $1, right? That's a 1-to-1 risk to reward ratio. So you see how these numbers right here are coming up and down, right? You see those? So a 1-to-1 ratio would be right there. You see what I'm saying? So at that entry with this fair value gap, we would have definitely in one candle would have hit our take profit, but um, I wasn't looking to trade that, right? And again, the only thing that was holding me back was these equal highs, because I know that there's traders that were probably in shorts that put their stop loss up here. And that's why I have this line marked up, right? So let me go ahead and delete that. So what I did instead is I waited a little bit more for price to give me some type of move like this, right? To see if it was going to hold. Because honestly, like I said, I thought it was going to hold at the NWOG and then just drop. But luckily and thankfully, I wasn't in any kind of trade until, if you look here, 10 a.m. is the silver bullet timing. 10 a.m. to 11. So it would have been right here. Notice that we took these highs and it looks like we had a fair value gap marked up from a higher time frame. Where are we at? Right here. So this is, if I'm not mistaken, probably like a daily fair value gap. Notice that there's all these highs right here. There's all these stops. And notice that price went completely straight up, took out anybody who was short here, right? Took them out. And that is the type of price action that I was looking for. I was like, let me see how can I get involved in this market, right? So this right here would have been a perfect trade. I'm kind of skeptical taking trades right after the open. If you notice, the time at the bottom is 9:32. Market opens at 9:30. You see how it just wicked both sides. It took out anybody who was trying to go long here, took them out, and then went above, came right back down. It looks like right into this order block, into this fair value gap, and then just started climbing higher. So I waited for an opportunity to get in. I saw that it looked like it was just going to continue higher. So I marked up this fair value gap right here. And a single pass like that is called a BISI, which is a form of fair value gap, right? And we'll go a little bit deeper into that probably here in the next videos. I'm going to be going over a couple of things to kind of break down what I've learned. But anyways, I saw this fair value gap. I entered right there. You notice that it more than likely, if I moved my stop up here for a 1-to-1, it probably would have given me a 1-to-1. We would have been in and out of that market. So instead of this low, if I would have moved it just to that low, and if I would have targeted remember, you see this 1-to-1 right there. So it would have given us a 1-to-1 right there. But unfortunately, that wasn't the case. I was targeting a little bit more than what I intended. And it almost went to my target. If you see that, it just barely went up there and then reversed on me, right? So I didn't notice this until later, which is another fair value gap that we can use, right there, which is this candle. And the line that I have right here, that's just consequent encroachment. All that is just the 50% of the fair value gap to see how it's going to respect in that zone. So this was my second entry. I took a loss at the beginning. So lesson here was just, give it some time for it to come back and see if it's going to fill those gaps. If not, I mean, there's always another trade tomorrow, so I'm not really worried about it. But I did enter because I saw this fair value gap, and I noticed that we had this little area that we hadn't tapped into right here. So it came straight into that. I entered right here at the wick. After I saw this, I noticed, and it wicked up. I was like, no, I'm gonna enter. So I entered. I took the risk. Put my low down here. If you look, put my stop right here at this low, and immediately we're on the 1 minute time frame. 1 minute entry to probably about a 3-minute trade. So that for me was a break even, right? So we took a loss on the first setup and then we won the second setup. And that was Monday's trade. So that was that. We're already at break even. So right off the bat, we didn't lose any money. So I'm happy that we didn't lose any money. I'm happy that we broke even on a Monday. So with that being said, I wasn't too upset. I was actually, I was okay with that. Sometimes the market's going to do things that you don't expect, and that's why you have a stop loss, and that's why you pay what you pay with the stop loss. So think of the stop loss not so much as like, oh man, I was wrong or something like that. Don't ever tell yourself that, because you using a stop loss is saving you from losing more capital in whether it's your funded or your live account. If you use a stop loss, you're being a responsible trader. So look at it that way, right? So just be thankful that your stop loss is there. And if it gets triggered and you lose money, guess what? That is just a fee to ensure that you keep the capital that you have left over after that trade, right? So that is what you pay your stop loss to do. So moving forward, let's go to Tuesday, and I'm going to be going back and forth so you guys can see on a higher time frame as well, what we're talking about. So on Tuesday, you notice that we had this bullish run all the way up, which is this move right here, right? Just looking at it, it's a little bit easier to see it on a 15-minute time frame. And this is what I upload on my Instagram story. Usually I upload 15-minute time charts to kind of show you guys what I'm looking at. So in the morning, I marked up this low as sell side and I marked up this low as sell side. Why did I mark these two up? For me, the price is already too high. So who's looking to get hurt next is what I'm anticipating, right? So if I personally was hang on. So if I personally was a market maker, right? And what I mean by that is if I was printing these candles and I needed to find where the market was going to go, right? In the logic of smart money concept, typically you are in somewhat shape or form targeting the retail traders, right? And the retail traders, what I mean by that is that's going to be 80 to 90% of traders who are new to this, right? People who are learning, they're, traders who are trading from home. They're not a huge firm, or, it's not like a bank is, you're not working for a bank or moving the bank's liquidity in the markets, right? Retail traders is me, right? I'm still considered a retail trader because I'm trading from home. I'm not an official, I guess you can say, like, floor trader or anything like that. So I'm still considered a retail trader, and that may sound a little confusing. But again, for those of you guys that are new to the channel or new to trading, leave a comment below, and I'll make a separate video for that so you guys can kind of get the hang of what I'm talking about. Um, but to put it in very simple terms, if I'm making this market, right, and I'm looking to see who has made money the longest, and it's very easy to see, right? It's very, very easy. So we were just here on Monday, and now we're moving into Tuesday. So from Monday to Tuesday, the market's just been buying up, been in a bullish trend, bullish trend, bullish trend. So if I was a typical retail trader, right? Somebody who is, uses support and resistance. If I'm buying here, right? If I just so happen to enter a trade here in a long, a, this low could be considered a stop loss for me because, right, if I'm in longs, I'm probably going to use the previous low as my stop loss in retail logic, right? Or for example, this low. So if it's in a bullish trend, the next person to get hurt and needs to get stopped out is going to be people who have been in longs, right? And that's just, if you're a seasoned trader, you know what I'm talking about between smart money concept and, excuse me, smart money concept and retail trading. Again, if you guys want me to go a little bit more into detail with that, so you guys better understand it, please leave a comment below or simply just send me a message on Instagram and I'll be more than happy to make those videos for you. But to make things easy, anybody who's been long here, their stop loss is eventually going to get hit no matter what. And that's what I mean by smart money concept. So smart money concept goes against the retail trader and typically takes their stop loss out and then makes their it's a fake move first, and then their move goes in their direction, right? So this is why I marked up this sell side liquidity and this sell side liquidity, because those are very easy lows, or I should say, very obvious lows, right? So if I was to tell you, hey, where was the last low in the market? Right here. Where was the next low in the market? Right here. And by using that logic, I can go down into a smaller time frame and see, if this goes up and takes out liquidity from these people who are looking to go short, they took these guys out and then took these guys out from being in any longs and then made their move, right? So if you know or practice that logic, you'll know going into a smaller time frame, for example, what we did that day, how to be able to maneuver in those markets and be able to catch some sort of move. And it, again, we're not trying to catch highs and lows. I used to lose a lot of money. I lost a lot of money trying to catch the lowest lows and the highest highs, trying to get, the best um win ratio or the highest RRs, right? I don't do that. I don't have to do that anymore because I know how to be able to maneuver myself and how to catch an entry, whether it's in the middle of the move, or pretty early, or even in the late stage of that move, right? So what happens here, right? We're looking at price at 8:30 in the morning. That's when I usually am in the markets. And what happened here? So I'm gonna wait because at this point it's so high in the market. I don't know if it's gonna continue going higher or if it's gonna give us a lower low and then rip up higher, right? We don't know. So we're gonna let the market do what it's gonna do. So 8:30 right here at the open, you can see how it wicked up. It just kind of sawed everybody out, and then it left this gap right here. This would have been your initial entry, right, to go short. Because what did it do? It gave us a really sharp high and then ripped lower, and it kind of kept going, sawing back up and forth, and then it dropped down. But when it dropped down, it left this empty candle. And what do I mean by empty candle? It's just another way for me to say a fair value gap, right? There's no price. If you look here, between here and here, there was no blue candles that came back up and filled that range to continue on down, because the market is almost like, I like to think it's an algorithm, right? It's an algorithm that what I've been learned to, or I've been taught to see, is think of it like a paint roller, right? If you go over this line right here and you're missing this gap, you have to overlap that. You have to overlap that because it's not complete. So this fair value gap hasn't been tapped into. There was no balance of price that, let people who were going short to get in, at least not yet, right? It wasn't up until here. Then you could have taken some shorts there. You notice that it's right about halfway, which is consequent encroachment, and then it just dropped. Again, I missed that move. I don't have to be in the initial move. So what do? I look to see if there's another opportunity for me to be able to get in. And what I see here, and why am I going short? I already saw the market purge all the buyers, or sorry, all the sellers that wanted to go short here, took them out, and then dropped immediately. And when I see this gives me an indication that I may want to go lower. So you notice I didn't enter in the first one because I wanted to make sure that we have some sort of market structure shift, which it gave it to us right here, right? This would have been your initial entry, created a volume imbalance here. This gave us another low. I trusted this one because we have already taken the highs up here from people who wanted to go short. This is in my head, this is them triggering a whole bunch of orders to go short. That's what that kind of gives me an idea of. Broke market structure, missed this move, goes lower, and then it creates this volume imbalance. I'm looking to see if this is going to get filled, right? Treat this like a fair value gap. So it goes lower, goes lower, goes lower. It's not until right here I see that it created. I didn't see anything other than this and this volume imbalance for me to be able to enter to target the lows, right? So I was either going to enter here if it came up and triggered all the way up to here. And then I wanted to see if it was going to return here. And I noticed that with this one, right, this fair value gap, it kept wicking. It didn't close until right here, right? I entered right here. Why did I enter right there? Because it was pretty close to maybe about 50% of the fair value gap that was created, so about halfway. And it kind of played around. I put my stop right here at this previous high, and right here I was targeting a 1-to-1 again because I learned already my lesson. I didn't want to target or over target my entry or my position. I just wanted to see if I can go ahead and practice my 1-to-1 ratios, which worked out perfectly because as soon as I entered, this is 1 minute. Each candle is 1 minute, so 1, entered at this one. So 1, 2, 3. I hate this thing. 1, 2, 3, 4, 5 minutes. This was a 5 minute trade, which was perfect because I don't want to. You don't want to be in the market all day trying to catch a setup. You want to catch your setup, be done, and then be done for the day. Move on to something else, right? Because at the end of the day, all you're trying to do is get your time back to do other things, right? That's the goal, at least for me within trading. So that was Tuesday's trade. Let's see if we can go ahead and check out Wednesday's trade. And you notice that that short could have played out pretty well if I left a runner. But right now I'm not practicing leaving any runners at the moment. So that might be something that I'm gonna try and practice here probably mids of next year, just to make sure that I'm pretty well rounded with my 1-to-1s. But looking at it, I basically took my trade here, short, targeted this area right here for lows, and then it came all the way down to take out this sell side liquidity, and then after that, it just completely took off. You see that this was their strong move to take people out, and then that was those were their entries right here, right? You see. So, anyways, moving on to Wednesday. See if we can go ahead and check this out. So you notice that it rallied for a pretty good while after those shorts. It rallied up for a pretty good while. You can see here, this was on a 15-minute time frame. Rallied up. It kind of floated right here for a little bit, and that kind of told me that, well, when price stops just like that and it's just going sideways, it's gonna take out liquidity one way or another. Whether it's gonna be tapping into these fair value gaps right here or BISIs. It could have came all the way down. It came 50% halfway of this move right here, right there, and then it took off. So we'll talk about consequent encroachment and fair value gaps here soon. But either way, it was gonna wick up or wick down, right? And I was waiting to see that happen. So again, because we've been in such a bull run, I'm expecting price to go lower to at least target somewhere around these lows, right? Let me go ahead and zoom into the lower time frame. Again, my bias was already price is too high. We need the price to go lower before it continues up higher, right? If that's the direction that we want to take it for the rest of the week. This was a beautiful trade. I actually took 2 entries on this. So I noticed that we had already wicked up above, and then I had a feeling that it wasn't going to leave this area the way it is. It's too clean. It's too sharp. It's just too clean for me. You notice that you see how this is just all price moving up and down. This is just too clean for me. And what that shows me is that there's stops right here. There's stops for people who were long. So that tells me that this is if it wicks up and then it gives me some type of short, I'm gonna take it because I'm willing to target these lows down here. So this was you can see 9:30 at the bottom. That was open, went all the way up, took out anybody who was wanting to go short, and then here you could have entered. This was a really good entry right here. I didn't take that. I wanted to wait. I'm okay with waiting. That would have been a great entry for you to be short, right? I missed that one. We didn't take that one. It wasn't within my trading time. I waited for it to, because it did create this. So if you notice it, let me go ahead and zoom in a little bit. It created this volume imbalance from here to here. Notice that there is not a full candle touching, like if you see these, or if you see these are overlapping, these are overlapping, these are overlapping. But these, they have a small gap, and that's called a volume imbalance, right? So I'm going to treat that and include that as a fair value gap all the way down to here. So I was going to be patient and see if I miss this move, it's okay, right? Yeah, I'm not gonna sweat it. I'm gonna see if there's another setup, and if there isn't another setup, and I miss the move. Excuse me. There's always tomorrow. So remember, there's always gonna be another trade. So there's no point in me risking money if I'm not. It's not likely to go into my direction. So I'm okay with being patient. I let this run. I marked this one up as well. It came down. taking these lows kind of confirmed that it probably did want to go lower. So I was like, all right, let's wait. We took an entry here. That was an entry for this fair value gap, and I put my stop loss right at this high, which I was kind of upset because it did come back and take me out. These were really good trades. These were really good setups. The only thing with these trades was that I had my stop, I think, was not in the right place where I needed it to be. And what I mean by that is my stop was here. So you notice that my stops got triggered. I got taken out right here. My stop was at this high right here, where this candle's high, this wick is. That's where my stop loss is. But had I moved my stop loss to this actual high instead of this one, which is not considered for me a solidified high, I would have been in. What if we had? Let me see. Would we have? Yeah, we would have hit TP. Notice that this one too, like to the wick, man. Look at that. They took me out. But if you look, if I would have moved my stop to this high, same thing with this guy, my stop would have never been triggered. You see that? My stop would have never been triggered, and my take profit would have been hit right there. It may have been a little bit longer trade than anticipated, but it would have hit take profit, right? It was a really good trade. It was a really good trade, but it didn't play out in my favor. So that day I just had to suck it up. It is what it is, and it was what it was. Again, I'm not going to stress over it because there's always going to be another trade. So for that day, we were done, if I'm not mistaken. Let me make sure. Oh, and this is where we went ahead and made contract changes. So contract changes happen when we have to switch our charts, right? So contract changes, I think, are every quarter, if I'm not mistaken. I would have to go back and double check with you on that. But notice that right here, we are on the NQ 2023 chart. Notice this one is 2024. So I think, if I'm not mistaken, they changed in the first or third. Correct me if I'm wrong, but I think it's the third week of every quarter, if I'm not mistaken. But if you want to make sure that you are on the most accurate contract, you want to go and look at NQ. Go to your futures, go to NQ, tap this tab, and then you can see here, like, for example, this one expires in March. We're going to be, after March expires, we're going to be moving on to the June contract, and September, December, and then so on and so forth. So guys, please make sure if you're using NQ or ES, you are on the correct contract cycle, right? And I'll give you guys a little bit more information on that. So I'll be sure to put that into the video because, again, I am also a student. I'm learning as I'm going. This is just my trading journey that I'm sharing with you guys. So as I'm learning, I'm going to be providing that information to you guys, right? I did try to see, I think on Wednesday, to see if I could take a quick trade. I wanted to see if this would hold up. Obviously, it didn't hold up. So that day, we also took another L right there. So let me go ahead and write this down because I don't think I wrote that one down in my journal. So at this point, we have three losses on Wednesday, one win, and then one break even. So at this point, we're not profitable yet for the week. Let's move on to Thursday. I think that's when I moved over to my 2024 contract. So let's, yes, Wednesday. This was a short that I was trying to take. It didn't play out in my favor, which was this one. Definitely didn't play out in my favor. So let's see here. So I just wanted to make sure that I'm on the right time frame that I took this next trade. So moving on to Thursday, we had this. I noticed that whenever I was looking at price in the morning, I had this volume imbalance created from day change, or I guess some when price closes at 5 p.m. and switches over to the next day, you notice at the cursor at the bottom it says Wednesday 4:59 p.m. and then after that market opens up Wednesday at 6 p.m. That's just they're just changing day, switching over to the next day, right? So you can use this as almost as how we use a NWOG, a new weekly opening gap, except this is just during the day. So when I was looking at the market in the morning, which is about 7 a.m., which is around this area, again, I marked this as a sell side, just like we did previously. If you guys remember, we had marked some of these right here, this one and this one, on the 2023 contract. And for Thursday, I marked this one and these as lows for sell side liquidity, right? You can see that obviously it played out in our favor. But market was looking like this whenever I was looking at it, right? This is the morning session, so I didn't have all this information here. This is where I was at. So again, we have a volume imbalance, which is going to act as a magnet in my eyes, right? Price is already high. There's a volume imbalance here, and there's sell side liquidity here. So in my mind, they have to come back and revisit these areas before going higher, if that's what they're going to want to do, right? Moving forward later in the day. But we also have these really clean highs that act as equal highs, or again, in my eyes, where people would have their stop losses if they were going short, right? Because people who look at equal highs or equal lows are gonna see that as either support or resistance. And in my eyes, people are gonna place their stop losses there. And that's why I want to make sure that before we do anything, I want to see what price is going to do. Is it going to take the highs and then move lower, or is it going to take lower prices to move higher, right? So this is where price was at. Let me go ahead and zoom in so you guys can take a look at it. Again, I'm already thinking prices is going to move lower because this is going to act as a magnet. But again, I'm watching these highs to make sure that I'm not going to be part of some sort of liquidity grab, right? So I think if I'm not mistaken, I think I took this trade on a 5 minute time frame. So let me go ahead and switch it to make sure. There's a perfect. Yes, I did take this on a 5 minute trade. So I also marked this internal high to see if maybe that could be part of our liquidity, because this very well may be the high for the week and then they're going to just push price lower. It being Wednesday, moving into Thursday in the middle of the week, usually in the middle of the week, there's going to be some sort of reversal, or they're going to create the low of the week or the high of the week. So watch out for that, right? Here we have these equal highs. I was anticipating price to go and purge these people first before moving lower. It didn't do that, but it did take out these highs and also tapped into this fair value gap and volume imbalance. I'm still learning how to take actual positions and trades here. So if you guys are looking at these little arrows, I'm still working out the kinks on learning again how to use these as my actual positions. But I just figured out how to set my take profit and my stop loss automatically, so that way I don't have these issues. Because what I was doing is, whenever I was entering a position, I initially thought that my take profit or my stop loss was going to be automatic, and it wasn't. So I had to kind of manually go in there and close my position. So that's why you see a couple of arrows, and I'll explain what those are here in just a little bit. But I noticed that there was these equal highs. It came in and it kind of stabbed into this fair value gap and volume imbalance. And then that's how I knew that it wanted to go lower, because it was rejecting here very, very well. And I just wanted to wait for price to give me some sort of big move like this candle right here to show me that, hey, this is a perfect entry that, we'd be interested in. So initially I marked this fair value gap. You notice that this was going to be a short. I actually took that position. I took that short here. So it looks something just like this. just like that right there. And I think I was targeting the, yeah, that volume imbalance. You notice that I took my short right here where this arrow is. I sold right there. It kind of did give me a 1-to-1. Again, that's just something that I should have practiced. I didn't. And it came in and took me out right here, right? If I'm not mistaken, I think I was trying to open up another position here. Again, I'm still trying to learn how to take my positions here on TradingView. So just bear with me. But that was my initial trade. That was a loss right there. Go ahead and delete that. I extended this out in time, and then I waited to see what 930 was going to give us, which was this candle right here. So notice this candle came up, and then here, I think this was another yeah, I have to figure this out to see how I'm using these and marking these up, because I was actually taking these trades on my phone, which is a big no-no, but um with what I was working on that day, I just had to be on mobile. But I ended up taking this other trade here. And this one perfectly worked out in our favor. I saw that we had this volume imbalance from here. Go ahead and move that back a little bit so you guys can actually take a look at it, because this one was from this morning, earlier that day. I just extended it out in time. But from here to here, you notice that there is a fair value gap, right? Oh, see if I can catch that. Right there. So notice that there's a void between this candle and this candle right here. This would have been a perfect entry. I think I entered right there if I'm not mistaken. I just want to make sure because, again, oh, yeah, I think so, because I took two positions. One sell right here, which was tapping right into or right at that fair value gap. And then I think I took another one here, but I think that one was on a 1 minute time frame. Let me go back and check. I want to make sure I give you guys this accurate. It's today's trade. Right here. Perfect. So this was my other position. Yes. I wonder why it shows that way versus the 5 minute time frame. But anyways, this is the initial entry right here. And then I had another entry. I don't know why it shows that way. Again, I'm still trying to learn how to use these as entries. But that's what my entry was. My stop was obviously right here. It could have very well came into this fair value gap, and if it did, that's okay. I would have entered there as well. We targeted that volume imbalance, and it worked out perfectly in our favor that day. So moving forward to Friday, that would have been a beautiful, beautiful trade if I would have held that all the way down to the stop, the sell side liquidity at the bottom over here that we talked about. Look at that. Beautiful, would have never even got close to our stop, delivered price beautifully. So moving on to Friday. Friday looked like this in the morning. Right there. So again, what are we looking at? Who has been making money the most the last couple of hours, right? People who have been in shorts. So, and especially here because we have a fair value gap, notice that there's no price being returned other than right here. And that's why price was slowly starting to retrace to fill in these gaps. That right there is a super obvious high right there. I know that there's people stop losses sitting right there. So I have that as buy side liquidity. Let's zoom in and see what we did that day. We were already high. We expected lower prices when it gave me this lower price. Notice how that wick took everybody out right here. Everybody that was long came back and triggered all their stop losses right there. Crazy, right? So Let's go ahead and zoom into the 1 minute so you guys can take a look at that Friday's trade was beautiful. So I think this is when I was actually getting a little bit more of the hang of how to trade with TradingView. Um, but this was my entry. After we took sell side, I wanted to see if there was some sort of move to go up and actually target these highs right here. Let's see. Yep, this high right here. I wanted to target that, and that's where I took my take profit right there. That's why I marked that up the way it is. I waited to see if it was going to give me some kind of indication that I wanted to go higher. This was a very risky move because this very well could have just tapped into this fair value gap and continued dropping, but I took a risk, right? I took a risk. I saw this fair value gap, came back in, tapped into that. I put my stop loss here at this previous low. And again, I was going to go ahead and target that high to see if we could have gotten that trade. It actually worked out perfect. This trade was basically from the open at 8:30 all the way up until 9:30, or right before the 9:30. 9:30 came back in, went lower, still didn't hit our stop loss, and then continued higher. At that point, I was completely done. I waited and I saw the PM session. I had a alert here to see if this buy side was going to be taken. Remember those equal highs. Buy side was purged right here. So when my alert came in, I knew that price was going to go lower because it had already taken buy side, right? So the next move is going to be going lower. So when a high gets taken out, chances are it's going to go lower and target the next low, which it didn't target all the low, but it did target most of these people that were in longs. This had this marked up as a fair value gap. I noticed that it came and stabbed in twice. I did feel like this was a little early entry, so I did wait a little bit longer. Notice I took my sell here within that fair value gap and then targeted this low. Notice that I took my sell with that red arrow right there, and my take profit was triggered right there at the sell side liquidity. I actually have a video of this whenever the trade was live and still running. I think we were floating somewhere around right here in profits, and then it just went down and completely triggered that take profit. But that was my week last week. I personally think it was a great week. There was a lot of lessons. Number one lesson was to wait for liquidity to be triggered, whether it's buy side or sell side. Try to see, or internal liquidity. Try to see if there's anywhere in there where price is going to show you, hey, we're going to take these stops and then we're going to move in the opposite direction, or are we going to go and be in a continuation trade? So that was my lesson for last week. Lesson, please. Always wait for some sort of catalyst, some sort of trigger, right? So in my case, I'm writing down in my journal. One of my lessons is going to be waiting for some sort of liquidity to be purged. The next lesson that I learned, or that I'm actually practicing now and putting into all my trades, is targeting a 1-to-1. This obviously was not a 1-to-1. This was a 1-to-2, but it was high in probability. So I was willing to risk my 1-to-2 to see if it was gonna play out, and this one as well. This was a 1-to-3. So technically, these trades covered my losses for the beginning of the week, and then some. So I was pretty happy about that. So yes, the other lesson was target 1-to-1s, and then being patient. Guys, be patient with yourself. Don't try to cram all this information all in, one sitting, or a couple of weeks, and promise yourself and say to yourself, hey, I'm going to be a millionaire. Be realistic with yourself. But with that being said, I think I kind of wanted to show you guys Monday's trade for this week, which was actually, what time is it now? 2:04 a.m. Yeah, it was yesterday. But on a higher time frame, you notice these highs right here. price had stabbed into NWOG. I had already had marked the NWOG, came back in, tapped into that, immediately went away from it, came back in, tapped it one more time. And then from there, now that we have already taken liquidity over here, I didn't see this breaking any lower. I saw it respecting. So in the morning, I wanted to see if it was going to respect price further and see if we can target this buy side, this obvious buy side, right? Look at these equal highs. To me, that's telling me that there's stops right there. Retail traders are getting in shorts. And to me, that is going to be my take profit. So I noticed that this candle gave me a really good, strong bullish candle, and it left a very small gap right here. This would have been a perfect entry, but I ended up entering on this one right here. So I think entered right there, which was part of this fair value gap. I think I entered on the 5-minute time frame. Yes, perfect. 5-minute time frame. You notice that from here to this wick, that is my fair value gap right there. When it came back down all the way here, I probably entered. I think it was. I personally thought it was about the 50% or lower, so I entered there. It did play around a little bit, but eventually came back up and took profit here at this buy side liquidity. I marked this down as an order block on the 1-minute. I'm gonna be practicing a little bit more with my order blocks and see if I can better explain them, and for myself, really, so I can learn to spot them a little bit easier. But if I'm not mistaken, this to me looks like an order block, this white candle that's right there. Point that out to you guys so you guys can take a look. This white candle right there to me is an order block. Normally an order block is just something where, to put in simple terms, is, for example, this is the last down close candle before a large up move. So your entry could have been here, but the real entry would have been these two right here. Came back in, tapped into those, and then just completely flew into buy side. But that was today's trade. I didn't take this trade. Would have been a beautiful runner, but didn't take it. I was just watching price. Like I said, I'm done trading for this year. But I'm going to continue making YouTube videos to kind of give you guys a little bit more information on what I'm going to be learning and what I'm going to be covering for myself so I can stay fresh and ready for January and February's trading. So for this video, that is going to be it. If you guys don't come back until next year, happy holidays, and I'll see you in the next video. You guys have a great day. See you.